Good afternoon, everybody, and thank you for joining us this afternoon. My name is Ian. I'm with SOFTRAX, and we're happy to be joined by a couple of professionals from Changepoint today for our presentation, Automating Services Organizations. We're going to discuss automating the order capture, billing, fulfillment, and recognition of revenue in the new world of ASC 606 and IFRS 15. So a few quick housekeeping points before we begin. This will be a CPE eligible webinar with your full participation. So if you are interested in qualifying for CPE credit, one CPE credit after the hour, please make sure to participate fully in the 3 polling questions that will be throughout the webinar. There will also be a brief 5-question survey at the very end, which you can answer in the GoToWebinar console. That's very helpful for improving our offerings in the future. Additionally, you can see on the GoToWebinar console the questions box. Please, at any point, feel free to submit a question. At the end, we will have some time for a Q&A. And in the event that we don't have enough time to answer all the questions, because sometimes we do get a lot of popularity in the questions, we'll make sure to answer via PDF distributed afterwards. For everyone who is CPE eligible, there's no action required on your part. Please just allow us a day to compile the records and the eligibility, and we will distribute the certificates via email. So I'll just give it one more minute. I see a couple of stragglers are still filtering in, and then I'll go ahead and I'll introduce our speakers and we'll get started. Once again, thank you very much from SOFTRAX and from Changepoint for joining us this afternoon, and we're looking forward to a great presentation today. And without further ado, I'm happy to introduce our 2 main presenters today. SOFTRAX, we're glad to be joined by Greg Davidson of Changepoint. Greg is a product management leader. He has a long career of launching successful products used by end users, by Fortune 500 companies. He's an absolute professional in the space. He's a dynamic thought leader, and he's a longtime partner and friend of SOFTRAX. We're delighted to be joined by him today. On the SOFTRAX side, we have Tom Zauli, our SVP and GM. Tom has a long career in revenue recognition automation software. His background is in sales and marketing, but also in engineering, and he's emerging as, again, a thought leader in the revenue recognition space. We're very excited to have this panel today. So without further ado, I'm happy to turn it over to Tom to take us through our agenda.
Okay, well, thank you guys for joining us, and I also want to thank our friends from Changepoint for attending the webinar. So the world is changing pretty quickly in terms of in multiple dimensions, but certainly in terms of the guidance that was released on ASC 606. We see impacts across the organization, and certainly impacts to infrastructure, to how systems are integrated. So there's really 3 primary integration points upstream for recognition or for revenue management in general, and those are order entry, billing, and fulfillment. And today we want to talk a little bit about the impacts we see from 606 to that back office infrastructure, and we're actually going to dive pretty deep today and walk through sort of step by step the integration points, how they've changed, what we've done in response to try to automate them, and we'll basically go through it. When we go through it, we're going to split it into 2 kind of key moments. One is all of the different myriad of things that have to occur in the back office when an initial order comes in. A new contract is signed, including setting it up, preparing for the billing, preparing for the revenue recognition, preparing to manage the services engagements, all of it. And then in the second portion, we're going to talk about, basically the steady state. So you have contracts that are in progress and they continue to be billed against, they continue to be fulfilled, services are executed, and what does that look like, and how's the back office changing from that? As Ian said at the end, we'll hopefully have some time for questions, and we hope you enjoy the material. So, to start with, in terms of the problem statement, there's many impacts from 606, obviously, but one of the big ones is that revenue recognition is no longer triggered up from the billing event. And when I'm speaking broadly when I say that, so, as I'm sure most of you know on the phone, I mean, we had a lot of industry-specific guidance in the United States before 606, and in some cases you would see recognition prior to billing, but in many you didn't. Similarly, with organizations that sold, multiple element arrangements, basically sold multiple things on a contract and discounted. In the software vertical and others, there was 97.2, the concept of allocation and the concept of maintaining fair values. But now, prevalently across a broad set of industries, you have this need to allocate, you have this need to manage what is now known as standalone selling price, and it's new. It's new for a number of organizations. They were not set up to deal with this, and we see them struggling effectively. One thing to point out in that regard is very fundamental. When you have this need to reallocate revenue, and just to be more specific, when I'm saying reallocate revenue, I'm talking about a proportional reallocation or moving monies from one line item to another in a given contract, based on essentially the proportionality of the historic standalone selling prices of that line item. It creates problems because now you have a transactional value for an element, and you have its new value resulting from the allocation. Well, that's all fine, but when you then start to have to, in an automated way, apply either bills or fulfillment events against that item, those upstream systems are not aware of the reallocation that's occurred, and so the subledger, I mean, some significant work has to go on to match. Okay, I worked 100 hours that were billed at $250 an hour. To me, that's 25 grand. But downstream in the revenue system, it's been reallocated, and that hourly value is down to like now $180 or something like that. So those are some of the complications that arise. And I'll turn it over to you, Greg.
Yeah, from a pre-ASC 606 and IFRS 15, services executives typically have had, what Tom has referred to as one pile of monies and a billing event. And that meant really a dollar was a dollar. And it's an aggregation of the projects and therefore the associated margins. That typically is changing, as Tom has indicated. Services executives historically could understand the revenue very quickly and easily because they owned all of that. Dollar was dollar. And they had their own knowledge of the cost structure, and they could track those operating margins against it. That has changed significantly, and that's certainly some of what we see between SOFTRAX and Changepoint as being fundamentally beneficial in what we would call, as I turn it back over to Tom, that post ASC 606 IFRS 15 world.
Mm-hmm. Yeah, so I mean, to summarize some of the things we'll talk about today, I mean, one that I spoke about a little bit initially is that there's impact to integration here between these systems, and then two, what Greg is speaking about is now it's really almost like a transfer of responsibility within the organization, in the sense that, I mean, lines of business could operate much more autonomously, I think, in the past, in terms of gaining some insight into where they stand from a revenue and a margin perspective. I think now, with 606 in place, it's much harder for them to do that, and it's one of the problems that we're aware of and that we try to address in this conversation and in our technologies.
So if we look at it from a problem statement perspective, there's really two things that are critical for services executives, and that is, number one, increased manual effort. It is through the introduction of ASC 606 and IFRS 15, services revenue really isn't scalable as the numbers increase. So the types of projects, the numbers of projects, and the financial treatments of the service delivery for such things as, let's say, fixed fee versus T&M, or a combination of those elements together, really complicates service executives' ability to scale, number one, and then number two, in those high volume scenarios, unnecessary excessive data reentry and or misallocation initially and a lot of that rework. It leads into the second problem statement, which is around the increased risk. You know, at each data entry, re-entry point, you're injecting risk into that process of potentially allocating that revenue incorrectly. And downstream from a financial management perspective and for those financial officers, audit implications. You know, it creates that nightmare of reconciliation issues, not only reconciliation, but from an audit perspective, their ability, what I call a financial integrity issue. And this is where we see this partnership and integration to be critical for services organizations. So hearing what you've heard, at least introducing that problem statement, we've got a poll for you, and we'll have that poll brought up. Are the changes in the regulatory standards for ASC 606 and IFRS 15 a cause for concern? And to what degree for your business? Is it a high priority, neutral, a low priority, or you're unsure as yet? You're simply just discovering that this might become a problem. We're certainly interested in that feedback.
Yeah, we'll give you a minute to answer, but while people are answering, I mean, Greg, I would say from our experience, what's occurring right now, we saw it first in public organizations, and we're just starting to see it in private organizations where, you know, they are, you know, definitely getting serious about adopting the tenets of the new standard. A number of companies, though, initially, because of, you know, just the time crush of it all, you know, the priority is just, you know, understanding what the new processing looks like, setting it up manually. I think there was a turning point for public companies probably a year after adoption, or, you know, some months at least after adoption, where they understood it, but they were now turning towards sort of how to operationalize it. And so there's a lag there. But you know, I think this question focuses just in general on, you know, what is the level of priority in general on 606. So Ian, do you have the results there? Okay. Interesting. Yeah, and that's interesting. The unsure amount is a little higher than I would have expected at this point, but it's, you know, there's a number of people outside of finance on the webinar, so it might be a check-in with the appropriate finance people, but not unexpected that 40% are high. I actually do think that number is going to grow over the coming year, you know, because it is roughly the time where people need to start thinking more seriously about this and how to operationalize. So.
Yeah, and I think your point, Tom, is valid in the sense of maturity. You know, I think operationalizing it right now, it's a manual effort, and I think that's potentially where we see a lot of those people fall into that unsure category. They may not be aware, but certainly organizationally, from the finance perspective, they may be manually reallocating or allocating those revenues accordingly. So it does become a higher priority to automate and operationalize.
Yeah, for sure. And that's actually a great segue into the next slide. So, so just a little bit of background on SOFTRAX and how we're thinking about this problem. So, you know, we talk about this infrastructure of automation. At the end of the day, there's four things that are going on that are substantial trends. One of them is certainly the new guidance 606, and I would speak even more broadly. I mean, there's new lease accounting, there's statutory tax changes, there's plenty of new regulation that companies are trying to absorb. Second major one we see is a migration to recurring revenue streams, subscription billing. I think COVID was a big accelerant of that, given that companies that were primarily on recurring revenue fared better. The third one is the Internet of Things, and it's you know, companies are moving, I think, somewhat slowly into the Internet of Things, but it bangs up directly against the new guidance. Once you start selling multi-element obligations and move from selling just some piece of hardware to hardware and software, the complexity both in the billing and the revenue recognition goes pretty much exponential, and it's been a challenge for those companies. The fourth thing is cloud. Companies are moving to cloud. I think the idea of customizing ERP, tried in the 90s, first decade of 2000s, didn't work, primarily because it usually led to customizations. You know, they were great because they scratched an itch at the time, but that led to vendor and version lock-in, and it eventually became a nightmare in terms of upgrading. I think a lot of people are familiar with the troubles that occurred there. So all four things considered, where the direction that we're heading in, and we'll speak a little bit to today, is to think of ERP as still certainly a necessary thing. It's still present. It's more of an evolution than revolution, where you're taking core ERP, treating it like a backbone and surrounding it by the modules that you need to fill whatever gaps you have. And those gaps could vary. I mean, this is a fairly comprehensive list of some of the areas that could occur. For us, obviously we focus heavily on revenue recognition. We'll talk about the order entry process. We'll talk about subscription and milestone billing, contract renewal management, and then we partner. We partner with companies for tax and for CPQ, CRM, and our primary and longest term partner on the fulfillment side, and where we've invested a lot in terms of integrations, has been with Changepoint. And with that, I'll turn it back to you, Greg.
Awesome. Thanks very much, Tom. So from a fulfillment perspective, as Tom has indicated, Changepoint's focus certainly and best of market is around what we call pure play services automation. And if you think about that from a fulfillment perspective, it really is what we call order to cash inside a services organization. So bringing in those opportunities from a CRM perspective, either through integration or natively within our solution, down through that contract project resource management, down to the financial billing and revenue recognition. And this is where we see our partnership, our strong partnership and tight integration working very well with SOFTRAX, in the sense that we take care of the work, the execution work, fulfilling those services engagements, contracts, projects with resources, and then from a financial treatment perspective, providing via the integration those elements, whether it's fixed fee, whether it's the time and materials that I spoke about earlier, or those mixed contracts, the ability to segregate and separate those revenue streams and types, and then be able to integrate obviously through to SOFTRAX from a revenue management perspective. The last thing that I'll say with regard to Changepoint is deployment styles, certainly from the marketplace perspective, both private cloud and on-premise, to meet the needs of what we'll call that ever-changing market. As Tom had indicated, the movement to the cloud. So certainly we're positioned and service those enterprise customers in regard to that pure play services automation.
Okay, so in the next section, we're going to start. That was a little bit about the problem statement. In the next section, we're going to start talking about, what can you do about this, and then a little bit specifically about what we've been doing about it. I would say that if you're operating in an environment where, either because of 606 or one of the other, drivers, where you feel like it's an increasing number of emails going around, an increasing number of spreadsheets, you feel like you're approaching sort of a house of cards in terms of some of the manual interactions that are occurring. This part is going to speak directly to that. So, I mean, these solutions were designed specifically to be able to remove that without having to go through like a massive, rip and replace of core infrastructure. So let's dive into it here a bit. So, in initial processing, obviously, it typically starts with an order or a contract. It varies business to business. Sometimes these things are coming in through portals. Sometimes it's literally hand entry of data. The idea is that somewhere in either CRM or potentially CPQ, you have data on what that order or contract is. I think at SOFTRAX, we like CPQ in the sense that, it gives you an option of having sort of, digitized signature of the agreement with your client on the specifics of the order. And that's powerful, so it helps prevent the idea of human error at the first phase of this whole thing. Now, what we're trying to do here is we're trying to approach something we call level 3 automation, which is sometimes in the industry referred to as continuous accounting. But it's the idea that, as this data moves through the system, does anybody have to touch it at all? And in a perfect world, the answer would be no. It would all be just automated, and you'd be looking at reports. Unfortunately, it's very hard to get to that perfect world. But we'll speak to where we are and where we still see potential gaps. Now, this data, starting from CRM and CPQ, is going to come down to in two areas. One area would be the flow to SOFTRAX enterprise in our case. So enterprise, basically, it's an entity that can collect that upstream data. Speaking to the gaps that I mentioned, currently, except in rare cases, there isn't all of the information available in either a CRM or a CPQ system to automate the downstream processing. You can think of things like there's information regarding maybe complex milestone schedules that drive billing. There is, certainly things in a subscription world like tiers and minimums and overages and how those things should be handled. So you won't typically see that. And so what enterprise provides is an ability, and I'm speaking about our stuff, but in some way you need to have an ability to augment the data that comes from CPQ. And that's effectively what enterprise is doing. But the intention is that once the data hits enterprise and that augmentation occurs, at least from a billing and a rev rec perspective, it's set it and forget it, meaning that the rest of the processing would occur in an automated fashion. And we'll get onto that in a little bit. And then over to Greg.
Yep, and from a perspective of from CRM down into Changepoint SA, there's a couple of things to keep in mind with regard to the integration and the value that our services automation tool provides. And that is really our ability to forecast that revenue utilization, forecast the revenue and bookings that have been established through the CRM system and optionally, as Tom had indicated, through SOFTRAX Enterprise, and identifying the booked backlog of business. And so what Changepoint SA does is a really good job about identifying that backlog and your ability to execute on it, understanding and having established the structure from a revenue perspective. So again, the treatment around the type of work that will be executed from a services automation perspective, as well as identifying when that can occur, so that things like your forecast revenue versus your actual revenue and the recognized revenue can be compared. So we do a really, really fundamentally good job of establishing that forecast versus the potential downstream revenue that you will be recognizing and ensuring that you can execute on that. So giving visibility within the organization to make sure that you've got the right resources, for example, to execute on what has come downstream through that closed order data process.
So at this point, data sitting in enterprise, and it's being set up for initial billing and revenue recognition. One of the things that we realized that we could do, so we did do, is create an integration from this point over to Changepoint. The reason why we did it is because once the data hits enterprise, it's in the land of accounting, meaning that they're now potentially augmenting that data like I described. They're verifying if necessary against the contract. At the end of the day, we have the initial data, all of the initial data that would be required by the services organization. Things like, who is the customer? What is the value of the project sold? Identifiers in terms of the line items of the project, etc. So we actually ship that data over to Changepoint via this integration toolkit. And then Greg can speak on what occurs within Changepoint once that data arrives.
Yep, and we'll decompose that, for lack of a better term, once we receive it through that integration framework within SA, and that really is a project manager or a program manager's responsibility to take that initial order and establish the right resources, the right time to execute on those services projects. So they'll actually create a framework WBS with those different types of tasks associated to those financial billing methods. So very quickly within the Changepoint services automation tool, you can establish the type of individuals, their skill sets, as well as when that work will get executed. And it will roll up automatically into the financial treatments that are governed underneath, or sorry, above that, which is at that contract level. So we do a really, really good job of making sure, and that's what Tom and I had talked about a little bit earlier, the automation of the and operationalizing that level of effort to ensure that when SOFTRAX gets it back, gets that information back, that we're not having to rework that. So we're segregating, we're making sure that there is a clear delineation between the type of work and the revenue treatment around that work.
So there's a number of things that kick off an enterprise at this point. So far, I mean, what we've talked about is the idea of starting with the data that's available in CRM CPQ, and we've really talked about two areas where there might be human intervention. We can take that data into enterprise, but not every time, but in some cases it might need to be augmented by humans in order to automate the downstream processes of billing and revenue recognition. And then as Greg just described, there's a second area where we send everything that we have to Changepoint in terms of what's known within enterprise in terms of the amounts sold and things like that require fulfillment. And there's still work, obviously project managers expanding out on that to do what they do in terms of managing the projects. From this point forward, we should be in good shape. So one of the things that occurs is the initial bills will automatically go out based on the work that was done in order entry within enterprise. And those could be milestone bills, there could be some initial one-time bills that occur, but those basically are the stage is set for actually not only those initial bills but also contract renewals to effectively be automated over time according to the schedules that were set up. And another thing that occurs is, we're talking about overall revenue management. So order to cash we just discussed, and then order to revenue recognition. So now we have total contract value within SOFTRAX Enterprise, and we have the integration to send that total contract value down to Revenue Manager. And so this is actually the first area of impact from 606. So what's required, and if you look back at a decade ago, whatever, almost all of the platforms that exist were designed to trigger trigger revenue recognition from the billing event. So this is the first area where 606 creates a big problem. It creates the problem because when you have to allocate, you may have billed sort of part of the order, one of the line items, part of one of the line items. And so transferring that data to recognition is no longer valid because in order to correctly do these proportional allocations against standalone selling price, you have to have this concept of total contract value. And that's one of the first things that gets sent down to Revenue Manager. So one of the ways to think about this is, I mentioned the need to augment data within enterprise, right? So by the time that augmentation occurs, what you're effectively doing is you're taking the original data that was in CPQ, anything that you need to do to augment within enterprise. You're also taking information that exists in the settings within enterprise and within Revenue Manager. And by settings, I mean those rules or policies that govern, for example, how revenue is recognized. With those three components, you now should be in a total automation space. So, we talked in the prior slide about the initial bill automatically being generated and sent out. With total contract value going to Revenue Manager and with the settings that exist within it in terms of, mapping that data to the appropriate general ledger accounts, assigning the appropriate schedules, perhaps determining how things should be unbundled. Those are all activities that kick off automatically based on, in this case, settings within the package. And so at the end of the day, you're basically set up to do all of the accounting that's required at the subledger level to get to the eventual goal, which is obviously journal entries.
And so talking through that, obviously the next question is going to be, we've talked about that initial order processing life cycle. What's the highest implication for your business potentially? Is it around the CM integration? Is it around setting up the billing process, setting up the services process, or setting up the revenue recognition processes? As Thomas talked about, and I think it's important as we get those answers back to identify the automation between those solutions that we're describing. The efficiency there is certainly important. And, you know, if I'm to comment on the SA side, the financial managers, the contract managers are less worried about setting it up correctly and more can focus more on the execution. Here's the delivery type, here's the contract type, here's the revenue type, and automating that process and segmenting that before the actual delivery. So downstream into revenue manager, that's a much easier recognition process.
Yeah. Yeah, I'm excited to see the results of the poll, because I think that's been, you know, certainly good attention paid to the integration of order data into these downstream processes. And I've even seen some attention on integrating, and this has been recent, but integrating bill data into the revenue recognition process. But the component that I think has not received enough attention is getting that fulfillment data integrated with the recognition process as well. And I've seen, if there's an area where there's more manual, it has been that in my experience. So but we'll see how it comes out. Interesting. I'm surprised.
Yeah.
So
I'm actually a little surprised. Yeah, I'm surprised. I'm actually surprised too as well, Tom. I thought we'd see a little bit more towards that setting up of the billing process, but it's looks like it's at that fundamental level, revenue recognition.
Yeah, I think we could be skewing it a bit, because you know, I know that there's a lot of financial and accounting people on the line that are knee deep in dealing with this revenue recognition problem right now. So the way I would interpret these results, I do see these things in phases. So it does always start with the revenue recognition process first, and it makes sense. Let's get the core understanding of what 606 means to our business and make sure we can process the revenue. And then becomes a look upstream to say, okay, we're doing a lot of things manually to get things into or out of the recognition process. How do we now automate those? And it leads to other questions. So, you know, my fundamental interpretation would be that this webinar will probably be forward-looking for some of you, because I do think once you get through some of the core initial work, you'll start to see some of these issues that you will now want to deal with. So it's interesting.
Yeah, very interesting. All right, from a steady state processing, now we talked about that initial order processing. Let's talk about the steady state processing component. From a Changepoint perspective, when we talk about the flow from enterprise and revenue manager for that billing and revenue recognition, there's a couple of key things to keep in mind and to understand that we do really well with our partnership and our integration. First off is, as the work's completed, that time and expense data that is made available via the consultants entering their time, the approvals, making sure that the work that has been done has been correctly accounted for and allocated, that via the integration actually can go over to SOFTRAX. So that fundamentally occurs in real time as you're executing on those projects. If it's, for example, time and material type projects, from a revenue recognition perspective, that information is available immediately upon going through that, what we call the order to cash approval process. The second thing that's fundamentally important is we on the Changepoint SA side, you know, as Tom had indicated, we deal with and identify that percent of transfer to SOFTRAX based on the contract type. So we're able to, number one, establish the type of contract as we've talked about in the initial setup, and based on the type of contract, typically with the fixed fee or the what we'll term as milestone, we're able to identify that percent complete that we then, based on that time and the consultants working on those projects, getting that information back, can actually trigger that information and transfer that percent of revenue directly into SOFTRAX Revenue Manager to trigger that revenue, the recognition of that revenue as you're executing on that project. So you're not waiting until end of month, you're not waiting till, let's say, end of deliverable, depending on where you're at with regard to that services-oriented project. So From a real-time perspective, you're able to understand that revenue. You're not forced to wait and then quickly catch up in whatever time frame is important to your organization.
Okay, so in the next step in processing, what you see here, the picture starts to get more and more complicated, and the reality is we're actually speaking to what I would consider to be sort of a mid-level of complexity so far. So, what's happening during steady state from a revenue recognition perspective. Well, let me start from an enterprise perspective. As Greg mentioned, it's receiving data from Changepoint in order to send out bills. It's also, on a periodic basis, sending out either subscription or milestone type or other bills as they should occur over time according to the settings. It has to then send all that bill data over to Revenue Manager, and the driver for that is, as I'm sure many are aware, is the new guidance requires a disclosure of the balances of contract asset and liability accounts. So, in a nutshell, it's not just how much revenue is to be recognized and how much sits in deferred. It's a question of the state of that revenue, whether it's been billed or not. And, it's managing the schedules, it's managing the account structures month to month. All of the math occurs that ends up resulting in summary journal entries that go back to the general ledger. And so, what we're trying to show here is and speak about is an infrastructure that can be bolted onto any ERP to handle, not necessarily total automation, because we wanted to point out the areas where humans might have to intervene, both on the enterprise and the Changepoint side, but certainly the potential for a high level of automation and a high level of automation while trying to also minimize the disruption to the organization. What we haven't gone into in this webinar, because we probably would not have enough time, is the increasing complexity that can occur. So, obviously the world is moving to subscription billing. There's IoT, which adds, potential supported software on top of hardware. Well, there are fundamental tenets within the 606 guidance that takes things from complex to basically horribly complex. And, perhaps in a future webinar, we can speak to some of these, but for example, whenever a contract is modified, so you're running a contract where you have some services and you have some software, maybe that software is a subscription, and you can up select or down select a number of users or functionality under the right conditions, and again, depending on the contract's written, but certainly a common case, that can trigger the need to follow what's called the contract modification or combination guidance within 606. Well, that guidance requires successive and potentially multiple reallocations of revenue over time in steady state as those changes occur. That has to be managed and ideally automatically against the feeds that we're describing here that are coming in from upstream systems, in terms of the percent of completion data, or percent of transfer data, the bill data, and those systems aren't aware of the allocation, so that translation has to occur, and in this case, it occurs within the context of Revenue Manager. Another thing to be on the lookout for, so we state that in terms of those companies that are moving heavily into recurring revenue or are already there. Anybody going into consumption-based billing, it's another area where things could potentially go from complex to horribly complex, because that triggers a section of the guidance around variable consideration and the need to maintain an understanding of what the expected recognition of revenue could be basically on the structure of the contract, and to revalue that variable consideration in some cases over time. So 606, to me, the adoption is occurring very incrementally, even in public companies to some degree, and part of it's just because of the changing business models within those companies. But I think what I'm seeing, at least out there in the CAOs and the CFOs that I speak with, is that they're absorbing more and more of the complexity of the guidance. Maybe they've done it in process and then now are trying to operationalize it. Maybe the business is changing, and so they're all suddenly faced with these even new processes that they have to adopt. Certainly M&A activity. Watch out, because I've seen some M&A activity where the back office of the acquiring company goes from complexity level of 2 to 10, because the acquisition is of the type that has just got that explosive level of complexity, and they have to adjust basically. So.
And I think that's an important segue, Tom, with regard to our partnership between Changepoint and SOFTRAX and our ability to provide, those all necessary changes, money movements, the financial analysis, and the reporting from what we call the order to cash or the booking all the way through to that revenue recognition and generation of those proper journal entries. Certainly from the SA side, the one thing that I can highlight and talk about to complement what Tom has said is business is ever changing, and the operationalizing and automating is certainly a critical part of what we do on the Changepoint SA side to ensure downstream, as Tom has indicated, that SOFTRAX can automate that revenue recognition process. We believe our integration, our partnership has been longstanding and certainly important, and our integration is important to services organizations, regardless of whether it's professional, embedded, or managed service type organizations. Tom, any closing thoughts?
Well, yeah, one thing before certainly you can put the poll up, Ian, but one thing I would say on that too is that I think that one of the good things about this, and I think about this in the context of multi-tenant cloud or cloud in general, is that we've seen more and more the downside of taking a customization approach, and I think that one of the great benefits I've seen from application of this infrastructure is that, for the most part, I mean, these are very deep functionality modules, some of the deepest on the market. And so it's one of the only solutions that I've seen where you can deploy them as is out of the box without the need to customize, because, A, they've survived the test of time, they've been around for quite a while, and B, we're combining a very deep domain expertise in each of these different areas, and so they're robust. I mean, they're basically robust. Let's see. So the question, yeah. This one is an interesting one. I'm interested to see the results. I almost wish we had. I mean, we have compliance there, but I would be interested in seeing. I think many people would probably just say, I just need to get compliant with 606 as fast as humanly possible. But we'll see what the results look like.
Yeah, as you said, Tom, I think a lot of organizations moving from public to private have been concerned downstream of making sure their processes are in order. I think next stage is around that operationalizing, having trouble with that word today, operationalizing and automating what they now understand much more clearly. And I think that is compliance with standards. So
yeah. Let's see how we did. Yeah. No surprise.
Yeah, no surprise for neither of us. That's for sure.
Yeah. And again, I think that I mean, my experience has been that this is somewhat of a phased thing. I think that the problem, the first problem I see. Well, let me say that I read a lot of good literature in probably the 2017, 2018 timeframe about basically the Big Four and others warning about the broad impacts of 606 across the organization. And sometimes it was followed, sometimes it wasn't. But in a lot of cases, I saw, problem number one was just understanding mechanically what is the impact of 606 and how I need to treat my revenue and what can I set up to make sure I'm compliant quickly. And a lot of conversations about, is it material and can I get by with something, and all kinds of things like that. Number two then became, and I see this, so if you're in a growing business or if you're acquisitive or whatever, as volume increases, I saw it increasing the rate at which people address the whole operational issue. And I did see a lot of people get caught off guard, caught flat-footed on that one, and have to react very quickly in the public space. And I suspect that will happen in the private space. If you were to draw concentric rings starting in the sort of the hub of revenue recognition and then out to the other parts of your enterprise, I think you see phases of operationalization over time in each of those rings. So like I said before, sometimes you see order entry to revenue recognition is the prime thing. Next, maybe is billing to revenue recognition. A lot of conversation on that right now. I think fulfillment to revenue recognition is extremely important. I think that it's as much there's as big an opportunity for automation and probably even bigger opportunity to avoid error through human mistake in that area. So I think that's the way it's going to play out. But hopefully, what you've seen today gives you some ideas on the kinds of integration points to consider for 606, and it gives you an idea of some things that maybe are very difficult to automate, like we talked about augmenting the data and things like that, but other areas that really should be automated, and in fact could be easily automated just because there are out-of-the-box solutions to handle this. Those would be my thoughts on that. So I sort of summarized there a bit, but to take it up a level, I mean, 606 definitely, I mean, it breaks the core infrastructure of existing ERP, which has been a tremendous problem with regards to recognition. Certainly, we've seen companies that, I mean, there are a lot of house of cards of spreadsheets and emails out there that are, A, they're expensive, B, they're very risky just from a day-to-day business operation. C, I think you run risk, especially if you're a company that's thinking about going public or getting acquired. It's a high risk threshold because you get into a due diligence process and they start finding stuff, they dig deeper, they find more stuff. It just becomes a nightmare. And third, I think that if you are in that area, then hopefully this presents an option to without having to take the nuclear approach of blowing away your ERP and setting the business back a couple of years, solving some of these problems pretty quickly and cleanly.
Yep. And to complement what Tom had said, certainly from an efficiency perspective, we see with both of our solutions that we provide, and certainly again through that partnership and integration, we're avoiding that duplicate data entry at the multiple points. It's reduction in that human effort, as we'd set up or talked about initially, removing the risk, remove that human error, reduce that risk in relation to making those mistakes, and then obviously all done in an auditable and controlled environment. So we are getting to a more automated, operationalized approach to being able to execute on services delivery and recognize that revenue appropriately.
Yeah, just one comment I would put on that last bullet too is that I've been super surprised by the rate of increase in intensity regarding controls and the audits that I've seen in the public companies. They're really, I feel like the last couple of years was almost like a pass in some ways, because I've just seen they're getting far more dialed in to some of these control issues and who has access to what sits in spreadsheets. Does everybody have their SOC 1, SOC 2 reports done? So the transition from a spreadsheet / email based infrastructure to something like this, I think it certainly helps now, but I think it's getting to be more and more required over time. And I don't know, I've been dealing with this in the public space, so we'll see if this translates into the private space here as well. So.
Great. Well, thank you guys both. Very interesting, very enlightening. We do have a couple of questions in, which is good. We have a little bit of time for Q&A. So if it's all right with you, I have some contact data up on the screen. So for all our viewers, if you would like to reach out, please feel free. But question to Tom and Greg first. So let me just pull it up here. Our first question looks like it's a question about the integration itself. How does it work with journal entries when you're pushing hours or percentage of completion to Revenue Manager? Is a journal entry generating every time you push a % completion to Revenue Manager? So I guess, Tom, maybe?
So the way to think about that is that a cumulative % of completion metric can be pushed at any time to Revenue Manager, and it's cumulative. So if you push another one before period close, it will show up there. Within Revenue Manager itself, there are strong period controls in the sense that, typically it's a month-end process where somebody with sufficient authority has to open the accounting period. Somebody has to, again, with sufficient authority, generate the journal entry and then effectively post it to the general ledger. However, it gets more complex in certain situations because we do have some clients that are doing some fairly advanced things where they're generating journal entries more than once a month and performing reconciliations more than once a month. And they might do that on a weekly basis. I don't think we have any clients doing it daily, but I have heard of other companies that are doing daily generation of journal entries. So within the context of the subledger itself, I mean, what's happening in that journal entry generation process is that it's sweeping through the system to understand any revenue that's been made available for recognition since the prior journal entry was generated. So if it's available for recognition, meaning in this case the POT has been passed over, it would get swept up in that generation process and it would appear in that journal entry. And I should clarify, we have the intelligence within the application so that on your next journal entry, obviously it's a new percent of completion. And these percent of completions are cumulative and could go either way. And this gets into some complexity, but so for example, you could have a lower percent of completion on the next pass for some reason, and we would handle the appropriate delta in the journal entry, whether it should be a net gain if it was an increase or a net drop if it was a decrease. And I mentioned earlier about some of the horrific complexity. So for those few of you that have contract modifications, cross-performance obligations that are not distinct, you could certainly see a catch up or a catch down like this, a change in the cumulative percent of completion that's applied.
Great, thanks for that. The next question up, have you seen a spike recently in issues relating to revenue recognition, given that ASC 606 has been around since December of 2017?
That is a very good question. And the answer is surprisingly yes. So, you have to ask yourself, so the guidance has been around for so long, well, for public companies, right? I mean, the private companies are just starting to deal with it now, but it's been around for so long, and yet why is there a growing spike in these issues? So first, just a sort of an anecdote to answer the question. In 2016 and 2017, there was a running joke sort of internal to SOFTRAX where people would joke about it, are they adopting the new guidance? And the answer would be, are you talking about the old new guidance or the new guidance? Because, in the private space, we still, in 2016 and 2017, we had a lot of people coming to us about 97.2 fair value and the need to finally automate it. So we knew it definitely would not be an instance where there's a compliance date and everybody in the world would come and look to operationalize it. I actually look back at the data that we have from 97.2 forward, and it was basically a linear ramp up from, I think, about, the late 90s, 99 through 2005, maybe 2006. It was just a ramp up in the rate of people looking to automate against 97.2, and throw SOX in there, which probably drove a lot of it, but yeah. So it's a very good question, but I think in the private space, I still feel like we're at the beginning. I could be wrong.
Yeah, and if I can compliment on that, Tom, as well, from a services automation perspective, and certainly what we're driving to do is around automation. And I think there are, at least on the services side, were they handling it? Yes, absolutely. But they were doing that as you and I have talked about and indicated, they were doing that through manual processes. So it really is public or private, it really is now the acceleration to automate those processes and to truly operationalize the information and obviously create that financial integrity, eliminate that human error. So I think there's a much greater focus, I think, on that automation component for a lot of financial individuals in these organizations.
Yeah.
Great. Thank you both. The next question, well, I guess this might be addressed in the last slide too, but what are the next steps to engage and who should we engage with after this?
Sure. Why don't you bring up that next slide? I think that probably answers it, but
right.
Sort of, yeah. So yeah, if you're interested in this, I'm sure our guys will probably be pinging you. I know Ian, for those that need it, will send out the CPE certificates. That should come to you. But if you have if you have an immediate question or an immediate need or whatever, if it's primarily on the services side, I would say reach out to Greg first. But Greg and I talk all the time, so if you need something, you pull me into it. If it's more like billing or revenue management related, revenue recognition related, you could reach out to either Ian or myself. And again, if it's got a services component, we pull Greg and the Changepoint team in as well. And we would love to hear from you. And if you have feedback, I think Ian's going to post a survey after this, but we always want to hear feedback on the approach that we're taking to solve these problems. So.
Great. Thanks, Tom. And we do have one more question. Can a single engagement include multiple revenue GL accounts for different business focuses, for example, by project?
Can you say it again, Ian? I want to make sure I understand the question.
Yep, the question was, can a single engagement include multiple revenue GL accounts for different business focuses, for example, by project?
So that's an interesting question because it sounds like a problem we're dealing with right now. If it's, I will give you my understanding. That's a pretty technical question, but my understanding is if you have sort of certainly separate line items that each indicate a different engagement or portion of engagement, then you can get they would wind up in getting assigned their own general ledger accounts. If it's a single engagement going through Changepoint, I'm not sure. I think some of the pieces there are there to support it. So that engagement, for example, would get unbundled within Revenue Manager and probably assign its own general ledger accounts there. But there might be work we would have to do to make sure. It all comes down to the identifiers that connect these systems. So is Changepoint aware that that split needs to occur, and can it send on a child basis, the amount of work that's occurred against each of those children that now sit in Revenue Manager with their own general ledger accounts? So the short answer is great question. That I gave you what I know, but if you follow up afterwards, I'd have to check with some of the technical people, probably on both sides, to properly answer the question.
Great. Well, thanks for that. It looks like we are right up against that time. So, Tom, Greg, anything else? Any closing remarks?
Thank you all for joining us. We always like to reach out to our people, and certainly any feedback, we would love to hear it. Greg, anything from you?
Yeah, I echo that. Certainly an important topic, and Tom and I are certainly passionate about this. It's going to continue to be important, and based on your feedback on the polls, it continues to be an important topic. So please, where necessary, reach out. Let's have those conversations, as we definitely want to solve those business problems for you. Thank you for your time today.
All right, everybody, thank you very much. CPE certificates will be distributed via email, and from SOFTRAX and from Changepoint, we hope you have a great afternoon. Thank you for your time, and thanks to our panelists.
Bye, everybody.